Hi, everyone. This is Arash Adnani from privateplacements.com. It's Thursday, March 26th. With me today, Chris Taylor, President and CEO of Bear Resources GBR and TSX Venture. Chris, thanks for joining me.
No problem, Arash. Nice to speak to you today from complete isolation in my office. I believe I am the only living soul in this building today.
Well, appreciate you joining us. Chris, let's just get right into it. So a week ago, you guys were trading at $5. You're now trading at just over $6. What's going on? What's the update here?
Well, Great Bear has been doing well in the market over the last few years. I mean, we were one of the TSX Venture top 50 stocks 2 years ago and last year as well. And we would hope to be able to repeat that in 2020 as well. Coronavirus completely aside, because we're still drilling. And I keep saying to everybody, I know it's a little bit redundant, but the virus has not removed a single scrap of gold from the ground at our project. So the fact that we're able to continue drilling it, we've taken some really impressive measures to keep everybody safe while doing that. But we want to protect the jobs and we want to keep the project moving forward. So I think we're in a good position, especially amongst the field of our peers this year. It's going to be a tough year for many in the mineral exploration industry, just given the fact that they cannot work, whereas Great Bear is in a pretty good shape. So I think, we've done pretty well, and I think we will continue to do well even with the current backdrop.
What's been the catalyst so far? So obviously this is one of the larger drill programs in Canada, and it's one of the largest new gold discoveries in Canada. COVID's happening, you guys aren't stopping, but there's a lot been going on with the company, a lot of positive news. Give us an update on what's been happening and what's coming up as far as milestones that you guys are reaching for.
Yeah, it's a good point, Arash. I think we were the second largest drill program in Canada until about a week ago, and I believe we're the largest now, really because the two other ones that were bigger than us are located in Quebec. And I believe at the moment, in terms of active drilling programs, active exploration programs, we are probably the largest, just given some of the jurisdictional shutdowns. So we're looking at here being able to continue this sort of 110,000 meter extension off our existing program. So a total of 200,000 meters to be drilled this year. That's about a $21 million exploration budget. And we're fully funded for that already. I know that your situation here is emphasizing private placements, but Great Bear is not doing any private placements in the near future. We're already fully funded for that. So this is now drilling and producing news on a regular, meaningful basis to grow the company over 2020.
So what are the drill programs active? And this is pretty unique as far as exploration goes, because a lot of companies have had to stop their programs because of the current state in the market and with obviously the COVID crisis. You guys are moving forward. You're well financed. What is some of upcoming updates for you guys that investors can look forward to? I mean, I'm looking at the stock myself. I haven't bought yet, but doing my research, I'm kind of scratching my head thinking, okay, well, I should buy right now because these guys are active. You're well financed into next year. You got a great team. You guys are affiliated with Discovery Group as well. So let's put it this way. Why don't you tell us like 3 kind of selling points on why I should buy the stock right after this interview?
Oh man, this is like, I feel as though we are now riding an elevator together, right? So what do they call this? The elevator pitch? So
let's call it the elevator pitch, yeah.
Yeah, here's the elevator pitch. So high-grade gold, to surface, beside a highway, beside a power line, just outside of a major high-grade gold mining district. Some of the best results that have come out in terms of active drill programs over the last couple of years have been coming out of Great Bear. And that means that, we're looking at something really rare, which is big scale size for the gold target that we've found, this new LP fault discovery we made about 9-10 months ago. I guess it was in May of last year, so it really has not been very long. But that looks like one of the largest recent finds for a physical footprint off of a gold system in Canada. I mean, for a brand new discovery, it is very large. It's a big, more than 20 kilometer long, deep-seated crustal big fault structure. And these are the big kind of structures that host the big gold deposits in other districts in Canada. And it looks like we found one of these that we entirely control on our Dixie project just outside of Red Lake. So, but what's really unusual is the scale. It looks like excellent continuity off the gold grades, really, I wouldn't say unprecedented, but really unusual in the space. And all that gold is going right to surface. So there are very few comparables that have all these features going for them. And this is against the backdrop of an industry that is, it's going to be a very interesting year in 2020 because the major producers that are still producing, and the majority of the gold mines around the world are still in production. So the big companies generally are doing quite well. They're looking at lower operational costs at the moment because fuel is a massive component of basically mining costs. I've worked at 3 active mines in my career. And fuel is a big component of that. If you're in a big open pit operation, it can be half of the cost of mining can be just fuel because you're moving tons and tons of rock around in big trucks, and obviously that costs a lot of money. So you're going to be looking at reduced operational costs, and the gold price, it's up hundreds of dollars an ounce from where it was last year. So really looking like gold itself is going to be generating a lot more profitability for the companies that are mining it. So what that means in terms of the M&A cycle is that these big companies are going to be looking at a very motivated pool of investors, based on gold doing well, and then they're going to be that's going to be reinforced by the fact that they're going to have probably once the short-term dust settles on the coronavirus situation, probably excellent profitability and very good financial quarters as we come out of this as well. So together, that's going to mean that the financial powers that be, the large investment groups that are funding these companies, they're going to want to see them, the pools of shareholders as well, they're going to want to see them replace the diminishing streams of resources that they have in hand. And that's going to lead to a lot of merger and acquisition sort of activity through the sector throughout 2020 and going into 2021. So definitely a good time to have a major gold discovery on your hands if you're a company like Great Bear Resources.
Okay, that's a very compelling elevator pitch. Thank you for that. I've been looking at the news flow that you guys have had. Tell us quickly. There's a royalty spinout that you guys have announced. If you can touch on that, and also the inclusion in the GDXJ VanEck fund. If you can just quickly update us on those 2 things and what's going on with them, please.
Okay, well, on the royalty side, we're in an interesting situation as a company, and this is the fact that, we can control fundraising and we can control drilling. You can never control what's in the ground. That's obviously up to Mother Nature. In our case, it's been very successful. The gold results have been consistently very, very good, as you'll see if you look at our past news flow and look at our upcoming news flow. I mean, you're going to see a consistent pattern here. In my view, we're waiting for assay results to come in all the time, obviously. But you look at that, and what you're going to see over the course of the year for a company like ours is really effectively proof of concept off of a major discovery. That's going to have knock-on effects on a number of other, in terms of perception of the company in the public space. I think just to, get around the underlying reasons for your question, I think what you're going to see is acknowledgement in the general market over the scale, continuity, and basically how good the discoveries that we've made are. That's really how I'd address that question. To get to the JDXJ, inclusion, I'll just skip to this for a second. It's some of the people that run these funds, like Joe Foster at VanEck. I've met Joe several times over the last number of years, and he had his finger on the pulse of what Great Bear was doing, even like 2 years ago. But what he saw is an illusion, it reflects what I was just talking about. He ended up following the news flow over that period of time. I met with him probably about a month and a half ago in New York before everything started to get out of hand with viral spread and all this, which actually precipitated. After that, I went right to PDAC. After PDAC, I went into 14 days of isolation, which I'm now out of. But Joe is somebody that's been in the industry for a long time, and he's responsible for for generating the list of names that get included in the GDXJ. And these have to be companies that have a minimum threshold of market capitalization. I believe it's a couple $100 million US. They have to trade in a liquid fashion, over a certain threshold. So we met those criteria, the market cap criteria. But really what's most important for somebody like that is to understand the growth prospects of the company. So to be included in the GDXJ was a good growth threshold for us, because it shows that the technical beings that understand how gold companies might perform given the nature of their discoveries, they've seen this story before. They've seen how major discoveries can play out. Joe especially has been in the industry a long time. He's got a lot of experience. So being included in an index like that, effectively, we're still a small portion of that fund. It's only 0.26% or something like this. But even because of the billions of dollars that are involved in this, being included in that index generated more than a couple million shares of buying into Great Bear. But the more important thing is that it's really a proof of concept and a proof of quality, and a proof that the company has good prospects ahead of it. So generally, I think if you did a comparison of the general mineral exploration company market and you compared that versus the GDXJ companies would outperform, consistently on a long-term basis, because, it's been vetted for not only past performance, but also the prospects of future performance. And to be included, I mean, if you look at the other peers on that index, I'm not going to list a bunch of names, but anybody can go and look that up. You'll see some very successful, emerging producers and major discovery stories. And they are definitely leading companies in the space. So I'm happy that we're in on there. I think it's the first step. I believe over time, as Great Bear continues to grow, there'll likely be other indices that we're included in. It's just a function of natural growth. All of these tend to generate, better valuation for shareholders over time.
So really, other than the buying that it brings in, it's almost like a stamp of approval as well. And it can kind of open up the floodgates for other funds to come in and start buying the Great Bear.
Yeah, but I guess to your first part of your question, I'm not avoiding the royalty question. The royalty, the reason that we put it on at an early stage in the company is because of what I just described. We're looking at something that I believe is a very unique, or not unique. There have been major discoveries made, like the LP fault zone at Dixie. The Hemlo deposit in Ontario keeps coming to mind. Geologically, we have a number of people that have commented on that have worked at Hemlo and have looked at our core, have looked at our data as well. It's a big fault-hosted, big deformation zone-hosted, disseminated high-grade gold deposit in similar types of rocks. And the Hemlo discovery really drove the gold exploration market in the early 1980s. What we have found at the LP fault is really, spatially in terms of footprint, strike length is larger than the zones that they defined at Hemlo. We don't know how it's all going to hang together yet, because it's still it's very early. Like, we just found this thing under a year ago, but it's looking very good. And Hemlo was consistent, kind of a panel about 2.6 kilometers long of disseminated high-grade gold. I guess it would average about 8 meters of about 8 grams per ton over about a couple kilometers. And that was 3 separate high-grade underground gold mines were developed on it. It's all currently owned by Barrick, but the net value of those deposits, the 3 of them together, was in billions. It's in the billions of dollars, So we're looking at something that looks like it has, a similar type of geology, a really good, even larger, our strike length of our zone that we've defined now, where we're seeing consistent high-grade mineralization surrounded by these wide lower grade halos, is about 4.2 kilometers. So not 2.6 like Hemlo, it's about 4.2 so far at the LP fault at Dixie. And then we've only drilled it now from surface down to about 500 meters depth. At the Hemlo discovery, they drilled down to about 1.5 kilometers depth. Right. So, and they mined it down about that deep. So, Hemlo was a 23 million ounce deposit, right? I don't know how many ounces there are at Dixie so far, but because it has this large spatial footprint, similar geology, similar disseminated gold, it has the potential to be a very big system. So with the royalty, I mean, what we see is that we think that what we're looking at is what the industry would call a tier one asset. Tier one assets, I mean, I was just at the BMO conference a month ago, and Mark Bristow from Barrick was talking about a tier one gold asset. He sees that as being 500,000 ounces of production a year and something like a 10-year mine life, you know. And we think, looking at the data, we have a very good chance of becoming a tier one asset with Great Bear. Now, companies like Barrick have mentioned that they are looking for tier one assets in Canada, in North America, but specifically Canada would be a great jurisdiction for them to find something like that. We think that we are developing something like that, and the drill bit will show whether that's true over time. I think it'll, you know, our view is very positive on that. Because we're very positive on what we found, we want to make sure our shareholders, Great Bear shareholders, are going to be the ones that benefit from future development of the project. And you realize most big projects like what we're looking at here at Dixie, they are not operated by junior companies. That just does not happen, because once you define a certain number of ounces, the tier one assets get gobbled up by the big mining companies. And these tend to be deals that are done on very favorable terms to the company that finds it and you know, begins the process of development. And you know, when you look at that, we think that we have a chance, a very good chance of being in that kind of position. And that means that if we're not going to be the ones operating it long term, we'd love to. You know, you'd love to develop the project all the way through mining and production. But you know, because you can't ignore history, most discoveries like this, if it is what we think it is, will be operated by a major company. So why not make sure, you know, when we got the project, and this is a little bit of history for you, you know, we bought out the entire, we staked probably 5/6 of the area of the project. We staked ourselves based on our own scientific reasoning. Bob Singh, our VP exploration and also a director of Great Bear, you know, was sitting down looking at some of the regional data, and we decided to stake the entire strike extent of this big crustal scale fault structure as it intersected a greenstone belt in this area, about 22 kilometers long, the property. That's the big structure. We're drilling all this high-grade mineralization in the LP fault, big, you know, kind of bulk tonnage gold mineralization halos around that high grade. I mean, it's been an incredible discovery. But, you know, because we bought out the project early on and staked it, we actually bought out a little portion of it that we did a deal on initially. We bought out the royalties on that as well. And when we staked the rest of the claims, there were no royalties on them. So unlike just about every other major discovery of this stage, we had a 0% royalties on it. So we said, look, to bring it up to just sort of, you know, a low royalty, which would even be probably below industry average, we could add, say, a 2% net smelter royalty onto the project and spin that out to our own shareholders, because we're shareholders of the company. You know, we have established significant positions. I've bought it in the market. I continue to do it whenever I get a chance, in, you know, bits and bobs whenever I can. And you buy it in private placements and you accumulate a position over time. We are totally aligned with shareholders. There's only 46 million shares of Great Bear issued and outstanding. So, you know, it's got a lot of money. It's got a great discovery, but it's still because we care about keeping the value on a per share basis. You know, we don't want to just see the market cap expand, but the share price not perform. So we've been paranoid and very diligent about keeping the share count under control. So there's still only 46 million shares issued and outstanding, only 53 million fully diluted, you know, so this means for us, we want our shareholders to benefit from future production. That's why we opted to do the royalty now, because it still is below like an industry average. You look at deposits like, you know, like the Malartic deposit that's operated by Agnico Eagle. That's got like a 5% net smelter royalty on it. And that's the basis for Osisko royalties. For us, we said, well, we could establish our own royalty-based company, you know, based on the discovery that we've made at Dixie, and we could make sure our shareholders end up being the shareholders of that company. All the, you know, all the original shareholders of GBR, or anybody that buys shares before basically the end of April. We have details coming out about this in a news release to reiterate that really soon. Will also be shareholders of that royalty spinout. We think that has a very good chance over the long term of being worth, you know, I don't know how much, but it could be similar to the value of Great Bear as a company today.
That's fantastic. Let's quickly do a recap there. So in 3 bullet points, why am I buying Great Bear right now? And I think I'm going to do it, but just 3 bullet points, short and sweet. Why own Great Bear now?
Number one, you made the mistake of interviewing me. Number two, there aren't. No, I was just kidding. High grade gold, high grade major discovery off the side of a highway in a major mining district. Upcoming royalty spinout. If you want to receive a dividend of sorts, I mean, it's not a dividend, but you would receive shares in that if you are a shareholder over the near future. And number three, you have outside of the natural growth of having a big gold discovery and that being worth more and more over time in the market, you have the opportunity to have a very active M&A cycle in the gold space, and you could stand to benefit from that if things keep going the way we're seeing in the market.
I love that. I love that. Okay, we're gonna just change speed here. Okay, we're gonna put on the classroom hat real quick. I want you, Chris Taylor, as someone who has run a very successful gold exploration company, to school me and our audience, okay, on how to pick the right exploration company to invest in. Okay, so obviously you just told us why we should own Great Bear, and I'm sure that's going to be a part of this decision. However, exploration is high risk, right? And so, in your opinion, if anyone's buying any exploration stocks, what things should we look for, and what things are really necessary to see in a company before hitting that buy?
Well, okay. A lot of it's going to come down to people, right? So I won't give you a bullet point list. We'll just talk about it for a sec.
Yeah.
Look at the people that are involved in the company. If your quote unquote exploration company is run by a lawyer, probably you want to run away from that one as a first choice.
Ouch.
Or an accountant or somebody like this. Look for somebody like myself. I used to work for a mid-tier producer. I have a master's degree in structural geology. My partner in this, in Great Bear, sort of a foundational partner in Great Bear's new iteration, is Bob Singh. He's a professional geologist. He's worked in Red Lake for 20 years, basically, deposits all over the world as well. Excellent computer modeler. I mean, you want to look at the team that you've put together. We're part of what we call the discovery group. So other key guys that are involved in that are John Robbins, Jim Paterson. You'd know about those guys from the Kamenak days, big sale to Goldcorp about 3 or 4 years ago for $500 million. Really good board. We have a good technical board. I mean, looking at a company like us, like we are built as an exploration discovery vehicle, and that has worked. You also want to see when you're looking at these companies, like there is a structural problem with the junior mining industry. And this is always a beef of mine, so just to kind of explain how this can work is a lot of the times the guys that buy the initial shares in a company in the junior sector, they manage through debt settlements or whatever the case is to buy that stock at a penny or a couple pennies a share, the equivalent. Early on you'll see management has organized itself so that it has millions and millions of shares of the vehicle that they're going to build the company around. The share count tends to be a bit too high. These guys have massive share positions. So if I were running a company and I had bought all my stock at a penny, by the time the retail audience gets to invest in the company, and the company is say 10 cents, say, issue some stock at a dime or whatever the case is, those guys could have made 5 to 10 times their money. Now, if you've already made 5 to 10 times your money, why do you really care about what the ultimate performance of the stock is going to be? So ask the people that are running these companies what they bought their stock for, and look at the records of their share purchases. If you look at ours, you'll see that I have bought stock in Great Bear in all the private placements and in the market over the last few years, the last several years. So basically look for that pattern when you're looking at management. You want to make sure that it's not a free ride for them. Once the retail audience is engaged, they're not just already running off of a 10, a 5, 10 bagger, right? So
yeah, they're motivated. They still have incentive to run the company properly.
That's right. You don't want to invest in a lifestyle company either. Like, if you look at me driving a 10-year-old Honda, I am clearly not, in the lap of luxury driving Ferraris and Lamborghinis around, like I'm basically the way that I'll make money with this company is as a shareholder of the company. So if you're talking to other companies, make sure that they're going to benefit as shareholders of the company. That way they're going to care about things like dilution, right? They're going to care about their share count. They're going to keep it as low as possible so that the price performance on a per share basis is as high as possible. You can't control the market. Look at this coronavirus situation. You
Right.
can't always control the market. So if you keep your share count low, you keep more options open over the long term, and you do better as an individual shareholder. So, those are a couple of the key things that you want to look for. Quality of basically experience and qualifications. Exploration companies should be run by explorers, right? And those explorers should be motivated to benefit as shareholders of the company. Outside of that, there's a lot of jurisdictional risk. I mean, man, you know that most of the world is not as good to live or work in as a place like Canada, right? In my past life, I've run projects. I had a project that we had in Mexico, excellent project geologically, and there are great places to work in Mexico. I'm not saying that, I'm just using an example. But, we had outside of the property before we shut it down, we had 11 people, not our people, but 11 local people killed in a gun battle, between drug people and government people, and just like it's not safe to work in those
Yeah.
environments. So there's a lot of jurisdictional risk plugged into other locations. So you want to see a safe jurisdiction, and then you want to see accessibility. Like, one of the reasons that we did the initial agreement on the Dixie project and then expanded so aggressively in Red Lake is like the project's right on the side of the highway. And I literally mean that. The highway goes over part of the claims, and there's a power line that goes over part of the claims. Like, guys right now say that in the coronavirus situation, you might have the best discovery in the world, but if it's up on a bloody mountain somewhere and you cannot fly in and out of it because you have work restrictions in place, or you have a narrow work season. This is always an issue when we're, you got to think about how exploration was done. Like, the low-hanging fruit around the world has mostly been found. I mean, modern geology has been in place more than 50 years, and there have been thousands of geologists combing around the earth, and the really low-hanging fruit, the highest grade gold that's sitting on surface, or copper, or whatever it is, it's mostly been found. So mostly now, like projects like ours, the reason that all this gold is going right to surface effectively beside the highway and nobody found it is there's like 2 or 3 meters, sometimes 10 meters of gravel that covers the entire property. And that means you don't see the bedrock. So it's all still there. If it were bare bedrock, this would have been mines years ago. Right. So there are examples where you can make new discoveries, but the operational risks of working up north or working up on the top of a mountain, they can be overcome. There are good mines that are developed in these locations, but the thresholds are so much higher. And then you get problems like COVID go through. Well, you can't run a camp up on a mountain, a helicopter-based camp up on a mountain just about anywhere in Canada right now. What if your helicopter pilot got sick? Everybody'd be stranded. And then under health regulations, you can't have people living in a camp either. So, I mean, like, the closer you are to infrastructure and access, the better an investment tends to be. So those are a couple key points I'd look for.
All right, so hold on, let's count them down. So jurisdiction, okay. Obviously, Canada's safe and it's great. And hey, by the way, GBR's in Ontario. Structure.
Yeah.
Right. I mean, cap structure and making sure that management teams align. But I think that the first one, and maybe this is just so overlooked, but you're so right. There's so many of these exploration companies where it's being run by lawyers or accountants, and no disrespect to lawyers and accountants, but if you're running an exploration company, you want to have a very geologist heavy team, and hopefully a team that has experience on their side. Listen, it's funny because as you're saying it, I'm kind of just like thinking, yeah, of course, it makes total sense. It's very logical. And the things you control, such as picking these things in the companies you invest in, because other things like coronavirus, you don't control. And these things, as we know, happen in the market. So, Chris, this was awesome. I'm super excited about what you guys are doing. This is the first time we've actually connected. It's a pleasure to chat with you and to meet you. And I hope we can bring you back and talk more as you guys grow and make great progress with the company. Thanks for your time. Appreciate it.
Yeah, thanks, Rash. It was great meeting you digitally like this. At some point, we'll meet in the flesh as well. No time in the next few months, I'm sure. But yeah, we'll keep everybody updated. I'll keep everybody going. I mean, I like talking about the project. It's been a great discovery, and it's a privilege to work on something like what we found at Dixie. It's just, right now, this is what I can do. I can't really look at rocks personally. I mean, it always puts a smile on my face when I see gold coming out of the ground. That's every geologist's dream, right? But this is
You're
the best.
True geologist. A true geologist. I just want to look at rocks.
Yeah, exactly. They don't talk. They don't provide any. They don't talk back. They don't argue with you. They're just rocks. Gold is gold. It looks great. It's nice seeing it in there. But yeah, thanks, Arash. I appreciate it.
All right, man. Thank you.